Becky, I am a long-term believer in Tesla. I think that the shares are undervalued.
Holding Tesla stock takes a unique blend of imagination, grit, and perhaps most importantly, patience. As volatile as the company has been, it will likely continue to be an excellent long-term investment. And so probably only long-term investors will find it easy to pull through this rollercoaster of an experience. Over the years, Tesla's sales and delivery numbers have not been stable, but there is no doubt that there will have been some pretty interesting things going on, and they're going to show consistent growth with the car company. Several investors and analysts determine Tesla's future based on the number of cars that it is able to deliver. And once again, analysts are starting to predict Tesla's delivery power for the year. Find out why Tesla stock has a strong buy rating from some of the best analysts in the industry. Hey guys, welcome back to Tesla Tomorrow. Tesla recently posted record quarterly vehicle deliveries. However, quarter-on-quarter sales growth was modest. Despite price cuts by the car company in several of its markets, the automaker cut prices for some of its cars due to rising competition and a bleak economic output. In late 2022, Tesla cut prices on its cars around the world. Model 3 and Model Y vehicles in Australia, France, Germany, the Netherlands, Norway, Switzerland, and the United Kingdom became less expensive. By enabling more people to purchase its cars, Tesla accelerated the world into a transition towards sustainable energy. Tesla had previously increased prices several times in the past few years. According to Tesla's Vice President for External Relations in China, Grace Tao, Tesla's price cuts are backed by innumerable engineering innovations. She stated that the company is responding to the country's call with practical actions to promote economic development and release the potential of domestic demand. Although many expected that these price cuts would draw in enormous demand for Tesla, that does seem to be the case, as some analysts claim the price cuts did not yield expected results. Why have they said this? Let's find out. But before we get into it, if you like this content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla delivered 422,875 vehicles for the first 3 months of this year, up 4% from the previous quarter. This was 36% higher than it was a year ago. According to Refinitiv data based on several analysts, the first quarter deliveries compare with analysis expectations of 430,008 vehicles. Other data shows that Wall Street was expecting Tesla to report deliveries of around 432,000 vehicles for the quarter. Tesla bull Gary Black said Tesla disclosed that a consensus of more than 20 analysts called for 421,500 vehicles delivered. Tesla missed the figure analysis surveyed by Refinitiv and other estimates, which show Tesla beat Wall Street expectations with its 422,875 vehicles delivered. Tesla delivered 6% more of its mainstay Model 3 and Model Y vehicles in the first 3 months of this year than the previous quarter. The number of deliveries for its higher-priced Model X and Model S vehicles slumped by 38%. The carmaker produced more cars than it delivered, manufacturing 440,808 vehicles for the first 3 months of this year. Tesla also ramped up production at new factories in Texas and Berlin, and as China production recovered from the lockdown hit. The car company recently tweeted that its Texas factory built 4,000 Model Ys in 1 week. Similarly, it also said in late February that its German plant was producing 4,000 cars per week. CFRA analyst Garrett Nelson recently upgraded Tesla stock to a strong buy rating. The analysis also increased the firm's price target from $250 to $275. Despite the supposed deliveries miss by Tesla, Nelson still maintained both the rating and price target for Tesla stock. The analysis stated that Tesla's story has a lot going for it, and so he reiterates this with a strong buy rating, and he also added that while he considers the release as a mild disappointment, any negative stock price reaction will likely be muted by news of OPEC's surprise output cut, which caused oil prices to jump and is considered bullish for EV sales. On the other hand, Citigroup analyst Ite Michaeli also said that he expects a slight pullback in Tesla stock after its delivery report. He told investors that the growing spread between production and deliveries will likely maintain focus on more price cuts in Q2. The Citigroup analysis also added that Tesla shares could retreat slightly with Q1 deliveries, regarded as an inline outcome with softer mix and lingering inventory build concerns. The major concern for investors and analysis at the moment is Tesla's earnings report from the first quarter of the year. Tesla earned $53.8 billion in sales revenue in 2021. This was up from $31.5 billion earned in 2020, with a 70.64% growth in sales during 2021. In 2022, Tesla remained the largest EV manufacturer in terms of revenue and market share, followed by Volkswagen. Tesla reported its fourth quarter earnings on the 25th of January 2023, beating on both earnings and revenue. The car company reported automotive revenue of $21.3 billion in the quarter, representing 33% growth year over year. Tesla's solid quarter is the latest sign that it's done an outstanding job with navigating through global supply chain and logistics challenges, weathering the storm better than most legacy automakers. As of today, Tesla has delivered over 4 million vehicles. However, there's no doubt that the car maker faces several near-term headwinds, including persistently high inflation, a looming economic slowdown, as well as the ongoing global chip shortage and various supply chain issues. Which begs the question, will this year be better for Tesla? While other automakers delivered their worst sales figures in a decade, Tesla's delivery statistics were praiseworthy in 2022. The company delivered 1,331,851 vehicles to customers worldwide, and by doing so, it increased its deliveries by 40% in comparison to the previous year. It also produced 47% more cars in 2022 compared to 2021. In 2022, Tesla expanded its international factories, and by March, the first Tesla vehicles were produced in Germany at the newly opened Giga Berlin. Tesla CEO Elon Musk plans to make Giga Berlin into a European jewel. The factory in China was also updated to manufacture as many as 750,000 Model 3 and Model Y electric cars annually. During 2022, Tesla installed the capacity across all of its factories to produce 100,000 Model S and X vehicles per year, together with 1.8 million Model Y and Model 3 vehicles. Managing partner at Deepwater Asset Management, Gene Munzer, said earlier this year that Tesla stock has more downside ahead, and investors should brace for as much as a 25% drop in future earnings amid recent price cuts. According to him, while he is a long-term believer in Tesla and thinks that the shares are undervalued, he'll still be cautious near term. He thinks that there's going to be some earnings pressure based on some of the discounting that has happened. Speaking on Tesla's price cuts, Gene Munster said that if Tesla didn't have the price cuts, it would have been pretty ugly. And while Tesla's delivery rate showed an acceleration, it didn't accelerate to the level Musk had suggested it would. The Loop Ventura's founder, however, noted that he remains positive on the company and thinks ultimately there are a few good reasons to own Tesla stock in 2023. The biggest headwind for Tesla has always been its valuation, but as the car company's surge in sales and profits has proven, a business can grow into a high venture valuation over time. At the beginning of this year, Tesla had a price-to-earnings ratio under 30, a price-to-sales ratio under 5, and a price-to-free cash flow ratio under 50. Since then, all three metrics have gone up as the stock price has risen. So while there's no denying that Tesla stock simply isn't as cheap as it was at the beginning of the year, its valuation isn't unreasonable if the company can keep growing at a breakneck pace. However, while investing in Tesla stock right now may be a pretty good idea, it's important to stay modest on your investment. One of the biggest mistakes an investor can make is allocating too much attention, time, and money to one stock. The biggest is this issue right here. The bigger the position, the easier it is to make an impulsive decision when stock prices are falling with no end in sight. Therefore, the best approach for most investors could be to own a reasonable but not overly sizable position in Tesla, and then let the multi-decade investment thesis play out. Do you think investors should hold onto their Tesla shares? Let us know down below. And don't forget to tell us what your valuation on Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.